Hi, welcome to the Market Alert for Tuesday, the 16th of August 2022. So halfway through August already. Bonds and stocks soar after Dismal data dump yesterday. No surprise there, is it? Bad news was good news yesterday. The dollar gains on global growth woes after a slew of negative impulses, meaning news items. US stocks notch mild gains led by growth, and tech yields declined on worrisome New York manufacturing survey. And other news, the big short, Michael Burry, liquidates entire portfolio, holds just one stock at the end of quarter two, which is interesting because Michael Burry, if you don't know, was the man who predicted and took advantage of the mortgage crisis of 2008, and he seems as a bit of a guru now. So that's why I've highlighted this one this morning. So he's removed all of his long positions, or his entire portfolio apart from one stock at the end of quarter two. I don't imagine that he's the only one as well. Also, the next leg lower is coming. Mike Wilson says stocks already discounted the Fed pivot, which is probably not even coming. But we'll have to wait and see on that one. It probably is, but not until January. But it's an interesting situation because obviously stocks have moved higher for the last 4 weeks and continue to do so during yesterday's session as well. And this was on the bad news of the Empire State Manufacturing Index, which came out at minus 31 when it was forecast at plus 5.1. So a massive swing the other way. Now, what you got to remember, normally if you read the details in these news items, it will say actual greater than forecast is good for currency and also for the markets, because obviously an increase in manufacturing is positive. However, a reduction would normally see the stock market move lower. However, the fact that we're in an interest rate rising cycle, then this is actually good news for the stock market in the sense that Powell may postpone increase in rates. It's an illusion, of course. He's going to continue to do that in the short term despite this. But normally this sort of figure would have sent the stock market moving lower. But it's supported by two things. Like I say, the Fed's potential pivot on rates. And secondly, we are mid-August, where most traders will be missing in action. And yesterday, of course, we had the French holiday and the Italian as well, which allowed the market to move to the upside. Today there are no economic news items, well, certainly not in the sense of medium or high impact. Low impact, you've got average earnings, unemployment claims. Now this is interesting because I've not actually looked at this. I thought I'd just have a quick look and see. Now, unemployment claims, it's amazing, isn't it? This used to be high impact, then it went to medium, and now unemployment numbers are actually low impact. So maybe we need to keep the low impact items actually highlighted as well. We've got building permits from the US as well. That used to be medium impact. Housing starts used to be medium impact. So worth a look in the morning just to make sure. But I didn't realise, I wondered where that had gone. I hadn't seen it for a while. And average earnings 3 month also. I wondered why they disappeared. So they've been downgraded. They're out at 7 a.m. So I wondered why we get the headlines on the mainstream media, and I think, well, we never saw it in Forex Factory, and that's because they've been downgraded. And quick look at the gold-silver ratio, moving back to the upside. Gold hammered as well as silver yesterday, but silver holding yesterday. An interesting observation there, which we'll look at in just a moment. But first, let's have a look at the Dow, see where the stock market moved during yesterday's trading session. So as you can see, we went through the 200 MA that we highlighted during yesterday's alert. You can also see that the market is above this so far today as well. We are due a correction in this market. Like I say, if you look and count the number of days, we're talking several weeks. It's I wouldn't say it was parabolic, but certainly only 2 days in the last month has the market actually closed below the 5-bar moving average. And there is a sort of a sense that once we get back to September, October, the markets will see the volatility pick up hugely. And also, of course, the news narrative will change as well, and we'll get some certainly get some pullbacks. If not, as Michael Burry is predicting there, another leg down, as it were, in the market. But at the moment, there's nothing to stop the market from going up. As you can see from yesterday, when the Dow opened, the second half an hour, the market just piled on the markup on the stocks. Like I say, Italy and France were closed. There was nobody prepared to sell into it, and it just kept moving to the upside. In fact, let me just go back to the daily chart and let's just have a look, see how many points we've moved up now during the last month. We're up to 3,824 now. This is not sustainable. That's nearly 4,000 points in the Dow now, in what would be considered recessionary times, or certainly heading into recessionary times. And what with all of the cost of living increasing everywhere, it's just insane, isn't it? But like I say, when most traders are away, those left in control can move the market to the upside and watch their portfolios increase in value and allow them to get out, as we saw in that article there, where Michael Burry got out in Q2, allowing, when the markets were moving back, to exit the positions. So yeah, the 30-minute charts, we've already been up and had a look at yesterday's high. We just drop that down. We've had a look at yesterday's high overnight, and the market moving slightly lower there. DP would be a place of support if the market does move down and have a bit of a breather. Through the high, we have to look at the weekly chart. We've got the 78% retracement from there, drawn back to there. And that is at 34,207, which will take us over the 4,000 points there. Monthly charts also heading back to 78% retracement as well, same figure there. In the German DAX, not making as big a strides as the Dow yesterday, an inside bar for this market, so just getting back to Friday's high. Price is trading sideways, bit of weakness there. Also, that 62 is going to play a part in moving the market to the downside, or even the potential to do so. Again, we just had a few red bars on the way up in this last month, so again due for a correction. But once it starts, it'll be interesting to see how it accelerates as well. The problem is when. So I still take the shorts, knowing full well that they're not going to last long, and then reverse positions and get back on the long side as soon as it runs out of steam, because obviously I'd like to be in the move as soon as possible. But then there is the argument, once it's established itself, it's a lot easier to trade as it is to trade to the long side at the moment. You just wait for the pullbacks in the smaller time frames and buy the market, and it goes in the direction you want it to. So the momentum is still strongly to the upside, but shorts are, no pun intended, short-lived. And it's important to be aware of this. At some point they will break down, and the way to actually see this is to have a look at the smaller time frames, like the 30-minute, where the market has already come back and is showing some weakness, and a close below the DP as well. Despite that thinking, you'll see yesterday the market went through the DP for 50 points and then reversed and moved higher, again because the momentum is on the upside. But again, there's still movement to the downside. It's just that the risk reward is at the moment inversely related. In the 5-minute chart for yesterday, you can see that move to the downside. Prices moved higher and then traded sideways, and then the cash market opened and some selling came in. The market then retraced and then moved back to the 50 bar moving average before becoming overbought with supply, crossover in stochastics, traded sideways and then spiked up. So what we've got here is an 89% retracement to the 50 bar and a small decline to the downside before once again we get demand where the market's brought back and prices trade up to the 50 bar moving average, the DP, before they move lower once more. So there's an established weakness there during yesterday in the DAX, that's for sure. It is showing some weakness. Again, we get the retracement after becoming oversold, with divergence, 50 bar moving average closing below there and then finding support once more until the Dow opens and then brings the market back to the DP, overbought, and then we come back to the 20 bar moving average with demand before moving back to the upside with the Dow aftermarket in the DAX. Overnight the market has gapped lower, it has filled this gap, which is good, and the market is now showing some weakness and moving to the downside. So I'd expect this market to open lower at 7 a.m. It also depends on those unemployment claims as well. In the S&P, trading up to the 78% retracement in the daily chart, 200 MA there as well, and overnight prices are sideways to lower, which you can see there. There's your move yesterday, and then overnight prices are already trading below the close. You've got your retracement in there as well, got a drop off in momentum. So the DP is going to be important, as is the 50 bar moving average. A close below these areas will see the market move lower and may even retest the low of yesterday as well. In the Ftse 100, also like soldiers lined up there, 89% retracement just above. Prices above the 5 bar moving average at the moment, but there was a bit of supply yesterday, not a great deal. As I say, it's vacation time, holiday time for most traders. And yesterday you can see the Ftse selling off to begin with, and then rebounding with the Dow, the nice V-shaped correction. Overnight the market's struggling with the high. We've come back down, we've gone up to about 78, 89. Again, watch the close. The 50 EMA and the DP level. Close below any of these, we'll see the market move lower. Keep an eye on the 30 bar moving average, so if you short the Ftse, as that will lend a bit of support for this market. In the currencies, the dollar was up yesterday, so everything else down. You can see the yen finding a bit of support at the 78% retracement. Traded down to it yesterday, but traded through it overnight. Didn't get quite to the 89% retracement. Prices moving slightly higher in the last few hours. There's yesterday, the market down back to the S2 and the 20 bar moving average before coming back down to the BRN, where we see demand. Market bouncing off this, stuck at the 20 bar moving average, becomes overbought, and with supply at the 20 bar moving average, and then makes its way lower overnight till it finds some support. We get the climatic volume, demand, crossover, market moving back and stuck at the DP and the 50 bar moving average, potentially ready for its next leg to the downside and retest of the lows. For those of you that trade the yen, what you would to do here is to have a look, see where that close is and the low, and you'll see the low ties in with a 62% retracement there. So if you do go short on this market, 62 holds a lot of support there, not only in yesterday's low but also the 62% retracement. In the pound, also showing some weakness because of the dollar strength yesterday, down to 89% retracement overnight, as you can see there. And in the 30-minute chart, so this is what it looks like. Yesterday we moved to the downside. We found support at the what's the price there? 120 level. That is it 120.05. And then prices bouncing off this up to the 50 bar and then becoming overbought, and then once closing below, continuing to the downside despite the one close above the 20 bar there. Well, two, the 5 bar, sorry, not the, the 5 and the 20 actually. And then just continuing to the downside. Overnight quiet until early hours. We see Asia move the price slightly lower. Markets moved higher and now it's stuck at yesterday's low, and that's why you see this at the low, which is why I highlighted this in the Japanese yen. And also, if any of the markets, stock markets in particular, are allowed to move lower today, watch yesterday's low. It's going to be very important for these markets that they hold this level. And finally, in the silver market, down day yesterday, as I mentioned, because of the dollar strength, and also sideways. But what was interesting for yesterday's session, if we look at the 30-minute, is that the 1 o'clock fix, the market didn't actually sell off, despite the fact the drop in manufacturing as well, minus 31. They could have used that because silver has a dual purpose of monetary and industrial. The industrial aspect of it to actually sell this market off. So I can only assume, following the JP Morgan conviction, they're actually keeping their heads down at the moment until that blows over. But overnight you can see that the market's retraced slightly, stuck in a bit of a sideways move there. But as I've said for the last few times in the market alert, it's starting to show a bit of strength. However, it comes with one caveat, and that is if the Dow has a strong sell-off or the DAX, then that is generally used to force the price of the metals down. So always keep that in mind as well. So the gold market sees prices move lower yesterday, closing below the 50 bar moving average and the 5 bar also, as prices trade sideways overnight. You can see that there was more support for gold. We had a sell-off, and then we had the manufacturing numbers there that brought the market back, and then prices have been sideways trying to move higher overnight, stronger than silver because we saw the gold-silver ratio moving to the upside, which means that silver is weaker than gold during this current down move. More of a sell-off in silver than in gold. And in the dollar, you can see prices moving higher there during yesterday. Bit of weakness overnight. There's the upside targets that we drew in during yesterday. So keep an eye on the dollar. That'll put pressure on the metals to the downside as well. And finally, crude oil came under a bit of a hammering yesterday as well. We're below the $100 per barrel level, and it's good to see the price come down at the pumps. It needs to come down a lot more as well. There's still some sort of cartel and racketeering going on there, but that's a different story. Okay, that will do it for this one. No news today. The market will make its own direction. Like I say, we're due for a correction, even if it's for one day. So keep an eye out on things and any sort of news that comes to the forefront, particularly geopolitical, that could assist in this. Okay, as ever, thanks for watching. See you in the next one.